go get a mortgage and the lender is like, okay, well, we're just going to need a hair sample, blood sample, your newborn's blood sample, and then we're going to have to hook your newborn up to a neurological testing center for a week so that we can study any ancestral link between you and your past ancestors who were unable to pay their debt. These are the most popular mortgages you'll probably come across whenever you're going to buy a house. Usually, if somebody is purchasing a house and they're using financing and it's a primary residence, they're going to be using one of these 4 mortgages. And it's going to be conventional, USDA, VA, or FHA. I don't know if you've ever bought a house, but it's not a super fun process. It can be fun, especially if you are a masochist. But, I think the part about it that's the least fun is the financing part. And no offense against lenders, because they're not doing it because they want to do it. I know that they have federal regulations they have to follow, but, if you ever go get a mortgage and the lender is like, okay, well, we're just going to need a hair sample, blood sample, your newborn's blood sample, and then we're going to have to hook your newborn up to a neurological testing center for a week so that we can study any ancestral link between you and your past ancestors who were unable to pay their debt. And then jump through 1,000 hoops, and then you get a loan. That's not fun. I say all of this because I think that there is a physical chemistry difference in somebody's brain before they're under contract and after they're under contract. You know how they always say, this is your brain. This is your brain on drugs. They need to do MRIs of a person pre-contract and post-contract. And it'll be like, this is your brain. And then it'll be like, this is your brain on real estate. And it'll just be all mangled and brutalized. Because I've done business with people I've known for 2 decades. And then as soon as they go under contract on a house, they're like, make it stop. So I figured the more information I can put out there on the front end, the better it is. So maybe if you learn something before you're under contract, you won't be so overwhelmed. That's my thinking on it. But anyways, we're starting with the conventional because it's private mortgage, private money. I'm not going to get into the very, very, very nitty gritty of these because I have different videos for that we can save that information for. I'm mostly going to be talking about where this hits you in your wallet and who can qualify for these and why you might want to use one versus the other. The conventional mortgage is it's called a 95% LTV loan, 95% loan to value. That just means that 95% of the purchase price is going to be in the form of a loan. And then the rest of it is going to be paid out of your pocket. So if you are buying a house for the amount that it appraised for and getting a conventional mortgage in the amount of 95% LTV, then you will be responsible for the other 5% of the value / purchase price. So that's one reason that some people don't want to go with the conventionals, because it's one of the higher percentage down payment loans, but it's usually going to be the best interest rate and only available to people who qualify for it, which is the case for all of these loans. But anybody can go for it. It's going to be limited based on price, but it goes up pretty high now because of purchase prices being so high across the board. You don't have to get to a jumbo mortgage like you used to for a while. So if you're buying a normal house in a normal price range, this loan will work. Next, we're going to cover the FHA. The FHA loan is not a loan from the government. None of these loans come from the government. The loan comes from a lender, and it's insured by whatever 3 or 4 letter U.S. government acronym that's in front of it. So if in this case it's the FHA, if it's FHA insured loan, that means if you stop making your payments as the borrower, then it's not the bank's problem. If it's an FHA loan, it's FHA's problem. They'll step in, or HUD will step in actually, and take over, bail the bank out so that they don't have to worry about collecting on your foreclosure or anything else like that. So since the bank has a potential situation in which they take ownership of this property, they have some say on what property it is. If you are buying a house that is in rundown, horrible condition, you're probably not going to be able to get an FHA insured loan without a whole lot of work being done to the place. Because for the most part, the FHA administration, they want the house to be in normal working order, essentially. So stuff like if it doesn't have handrails next to stairs, if it has broken windows, if it doesn't have flooring, if it has exposed wood rot, termite damage, termite activity, all of that stuff's gonna have to be fixed before you can buy it. And they don't care who pays for it, but the bank's not gonna pay for it. When I say they don't care who pays, I mean the government and the banks. They don't care who pays for these repairs to be done before closing. It can be the buyer or the seller. It just has to happen for you to be able to get that loan. So that's the FHA loan, and you're going to have those same those standards that the property standards I just mentioned. Those are going to apply to USDA and VA as well. So what's the difference between down payment? About a 1.5% difference between the conventional and the FHA, because the FHA is a 96.5% LTV loan, meaning you have a 3.5% down payment requirement. Before we go any further, down payment is separate from your closing costs. It's a part of your closing costs, but that's not the only thing you have to be worrying about bringing to the table cash-wise, or cashier's check, or whatever they have you paying it as wire. So that is the FHA loan. Next is going to be the USDA loan. And then before I get into the VA, the USDA and the VA are both 100% loan-to-value products. That means no down payment, baby. Yeah, no down payment. That's pretty sweet. So these are probably pretty popular loans. Well, they are. And these are the two that are restricted to certain people or certain areas. The VA loan is restricted to veterans. You probably could have guessed that. Veterans or widows of veterans, there is a certain time in service criteria that I'm not going to get into that. But if you think you might qualify for it, then you've probably at least served some time in the military. If you haven't served time in the military, then you don't qualify for it. I'll save you the time. You don't have to ask your lender. If you think you qualify for it, I'd say ask your lender, and they can tell you. But it's got a funding fee that you have to pay. But other than that, it's probably the best loan product, which makes sense to me personally, because you have to sacrifice a whole lot to be able to qualify for that loan. Last on our list is the USDA loan. This is not qualified to a specific person other than there is an income restriction, meaning you can't make over a certain amount of money. This is geographically qualified, meaning in certain areas that the USDA has deemed as rural development areas, you can get one of these loans. But you still have to pass the income test and not make more than a certain amount of money, and the house has to be in that area and in a similar condition to the FHA requirements, like no exposed wood, all that stuff. So those are the four most popular mortgages. There are so many loan products out there. You can get a mortgage for every different day of the year almost. These are just the four big ones that you will need to know about before you get into this process of wanting to buy or sell properties. Because as a seller, some of these will be more appealing to you than others. Okay. I will make videos that are more in depth on these products and the mortgage process. This was just needing to be made from a general standpoint, because it's good general information to have. So if you have any questions, or you want me to make any more videos that are similar to this one, or answer any questions that I didn't answer in this one, let me know.